I'll move straight to the chat and we can, yeah, I can see you clearly enough. Okay, thank you. Okay, so while we wait for others to join in, I'll just move straight up uh, to our chats. I, I taught on market structure, and I believe most of us, got value from that video. If you're currently in the Telegram, free Telegram group, you'll find that video there. It's for free. And even after this section, I'll be updating this particular video to the Telegram group. Excuse me, to the Telegram group. So I talked about market structure about 2 years ago, and I was telling you how that it was very important to be able to know how to apply the rules of market structure to your trading, and how that can, transit you from point A to point B in your trading performance. So another thing I've been doing lately is, you know, getting to use market sentiment to explore my view of the chart in a deeper way, in a deeper understanding. So I've been using two asset classes, which we have, which I'll be showing you guys here. So a lot of people are still joining in, but we'll just go straight to the point. I'll still drop the video after now. So we have the yen basket, JPY basket. Now, just as the name implies, yen basket. Now, you have asset classes that are yen correlated, GBP JPY, Euro JPY, USD JPY. All of these pairs, are yen correlated, yen quoted. So it's when you study correlation in the market, you see cases where when a pair is going down, maybe if GBP, okay, GBP USD for instance, when you have GBP USD for instance, if GBP is going up, it's expected that USD should be selling up. So when we want to now understand what is happening generally with the entire yen basket, that's the Euro JPY, USD JPY, GBP JPY, NZD JPY, all of this JPY. We try to use the yen basket to determine the direction. So in this case, because we're dealing with yen specifically, when yen is actually going down as a basket, we expect that the yen quoted pairs or yen based pairs, that's the GBP, GBP, JPY, for instance, expect that GBP should be bullish. Why this is going down, why yen is going down, we expect that USD should be bullish, GBP, JPY should be bullish, Euro USD should be bullish. But then there is also a deeper understanding of it, because it's also important to understand when the market is in a temporary trend. What I mean is, you could have okay, like currently what's going on in the yen. I have all of these markups. I don't want to take it off, but I'll look for a plain chart so we can have this particular pair and then draw our markups. So okay, I'll just do a bit of analysis. Someone is raising his hand up. Can you please ask a question in the chat box? Okay, I'm just seeing a question. Is JPY basket the same as JXY Japanese index? Perfect. Yes, but actually, okay, Japanese index. I think it is. I think it should be. So, but then for this class, we'll be looking at JPY yen basket. specifically. And also, just like I said, for the yen basket, we also have another one, which is the XY currency index. The currency index tells me or explains to me, um, the gives me an idea of what is happening to the USD, generally speaking, what is happening to the US dollar, generally speaking. So if the currency index is actually bullish, it tells me, it gives me a clue that everything that has to do with USD is going to be bullish. So I try to always look at this pair. If you've been following me, my analysis on the group page, you will see how that I always post my DXY and my yen basket before I start to trade for the week. So I always want to look out for what is going to happen across board for USD, and I also want to look out for what's going to happen across board for the yen basket. So these are the two specific um, asset class, these assets that I want to use to determine the direction I want to trade for the week. So this is the XY, but let me go and look for JPY so that we can consider it. So, okay, now this is JPY. So I'll just be doing a very simple top-down analysis, just like you all know. Simple top-down analysis. So just like I said, like a few years ago when I taught in the group, I said when you want to consider structure, when you want to start to look at the charts, I always like to look from the higher time frame, monthly chart. That's where I want to start my analysis from. So I always want to look out for the monthly chart and see the slope of the market, of that current market. I want to understand how that slope is for that particular market. And now it's so obvious for the JPY, for the JPY that we see a high here, a low here, a lower high, a lower low, a lower high, and then you can see the market is actually slanting downwards. We can see a crash, sideways, crash. This is already giving me an idea that the slope of the market is actually bearish. That's from the higher time frame. You can as well use your line chart to see what the market is trying to say, and then you can see lower highs, lower lows, indicating that the market is generally bearish, right? That's for the monthly chart. So when I look at this, I also want to look out for structure. I want to also consider structure. So I can look for like most visible or obvious areas where the market kind of found some level of resistance. So you can see here price came broke this level and came back to reject on this level. So I want to like pick from the last candle close, to the week of the highest candle. So I see this particular week. So these are very basic markups, very, very basic stuff. So you see price coming down, crashing lower, and then going to retest into going to the supply area and then crashing lower. And then this is just one of the tips. I want to check out for the monthly chart. Then I also want to go to the weekly chart. I think for the yen, generally speaking, we don't have enough data for the yen, but then we can still make do. We can, when the higher time frame, it's not actually giving you, so it's not giving you enough data to work with. You can actually step down lower. So if you're on the monthly chart and you don't have enough data to work with it, you can actually go scale lower to a lower time frame to check what is actually going on the lower time frame. So you want to check for more data, more information to see how you can take advantage of that data. So right now we also see the base here, we see crash sideways move, just like showed us on the monthly chart. So you see this crash is very obvious, very, very obvious. So I could as well try to connect 2 points, point A, point B, um, from A point B, any 2 points that can touch the chart. So you see 1 point here, you see another point here. Price is still kind of struggling to like come to this level again. So I also want to apply the rules of my trend line, you know, and then also on the weekly chart, I also want to know what exactly is going on structure wise, right? Structure wise. So I can see that there was a massive crash from here and here to this point. Someone is raising his hand up again. Okay, so the same person. If you have any questions, you can type in the chat area and I'll try to attempt it as we go on. So I also want to see, understand when I've been able to identify those levels on the higher time frame, monthly chart, I move down to the weekly chart to also try to see what structure is saying. And then just barely looking at these, I can see that there was a level here, level here, price, level here. You can see how price broke below this level. And can a week be considered as a break of market structure? Um, I personally would not use a week. I prefer using the candles body, a full candles breakout. So we can see, for instance, here we can see a low point here, and then we see how price broke below this level. So the very first candle that breaks this week, these two levels, the very first candle that broke below this level, where I'll consider my BOS. In case my cursor here, uh, I will be considering this candle here for my BOS. So we see this happening, price slanting to the downside, and then coming back for a retest and then coming to the downside. So generally speaking, as you already know my trading style, I would like to always apply the use of Fibonacci. So I have my point A, I have my point B somewhere around here, point A, point B, and it's so obvious that price is actually testing off on a 38.2, right? So I want to expect that price start to fall down to this level eventually. That's what I expect price to do, right? From here, 38.2, which is the most aggressive level of Fibonacci. When price is testing several levels of Fibonacci, we actually have very aggressive levels. 38.2 being the most aggressive goes for the highest extension, which is 2.24 level. So this is how far I want, this is how far I expect the yen market to get to. Like, this is how far I expect the yen market to get to. This is how far. Like, this is a lot of pips. Like, a lot of pips. Now, if I've done this analysis and then I already expect this kind of move. Now, let me give you a trading secret that is going to help your journey. Always trade in the direction of the weekly chart. Trade the market in the direction of the weekly chart. Now, I see a lot of people going to M15, M5, H1. Now, it's good. It's good. You can trade just, depending on how your strategy works, you can do all of that. But then, personally, I always want to trade in the direction of the weekly chart. So I do my analysis, my major analysis on the weekly chart, and then I want to trade structures in line with that direction. So now I already know right now that um, this is how far I expect the yen to go. Now, from everything I've been saying, what do you think is going to be happening to um, um, pairs that are yen correlated, yen quoted? What do you think is going to be happening overall? So isn't that a double bottom? Yeah, yeah, this looks like a double bottom. Now you need to understand that in every legs, in every leg of the market, like the weekly leg. Now, okay, I did something. You will have seen me do that analysis. This is, let me look for that stuff I use for weeks pattern on A. point B, point C, point D, as far as we can go, right? Excuse me. Now you need to understand that overall, based off of the weekly chart, we are seeing downward moves, right? We expect downward moves, but even though we expect downward moves, the market is not just going to go down automatically. If you start to go down lower time frames, like the daily chart, you'll begin to see smaller time frame structure. You begin to see, okay, now someone said, isn't that a double bottom? Now you can see a double bottom here. You can see price took out this liquidity, something like this. See this happen. Price took out this liquidity here, and then started to go back up. Now, even if you want to consider this, you can, from just looking at this, I know that this is also bearish, right? This is also bearish. You see a bearish pattern here. So I see that price created a point A, point B, point C, and then came for zero levels. I was going to draw my Fibonacci from here, point A, point B, point A, point B, point C, point D. You can see this was actually my TP. Zero levels always are take profits. First take profit, TP1. So you can see point A, point B, point C, and point D. And so, whatever is just happening here is just the market happening. Just the market happening. So I also drew a trend line from here connecting 2 points, point A, point A, point A, point B, point A, point B, can you see how price still rejected of this level? Now on my own chart, the chart I use personally, I have key levels that are actually rejecting price at this level. Price was actually rejecting, those levels are actually rejecting price on these levels. So you have to be you have to know which levels are holding and which levels do not hold. So we see point A, point B, price rejecting this level. So we are still bearish overall. So, but then you also have to understand that in as much as this is happening, we are still finding structures in structures. So while we see a bearish structure or a bullish structure, or overall on the weekly a bearish structure, we still have to know what's going on the smaller time frames to be able to identify, or be able to observe and know what is meant to happen in that particular market. So in as much as we know that overall on the weekly chart we are bearish, we can still also see signs of bullish patterns, bullish structures, bullish price action happening. So we see, higher highs, see higher highs, price coming for a third touch here on the trend line, third touch here. So hopefully price might go all the way up again before it crashes to the downside. Then if this breakouts, then it may continue lower. So all of this bullish price action we see here, right? All of this bullish price action we see here is just a momentary move. It's just going to be happening temporarily. It's not a move that is going to be there for a long time. So we have to know what the main direction of the market is before we start to, so some people now will just come and say, yen is actually bullish. You're actually bullish, but you're trading against the overall direction. You're trading against the overall direction. So if I see this happen, I'll also trade it to the upside, right? Because Fibonacci will give me a clue for where structure is broken. So if I want to consider this as a buy, consider my point A, point B, obvious low to obvious high, retest here of 786, and then price came to smash my TP, negative 27. Was so clear, so clear. So I know that, okay, when price comes to one of this level, negative 27 or any of this level, and then smashes the TP, then you may start to look for another opportunity to start to come to the downside. Now, when price breaks below this level, before I'll start to look out for a sell-off of the yen basket, right? I'll expect price to break below this level. That's structure breaking to the downside like this, we test, and then where do you think we're going to? The overall direction, on the weekly chart. Overall direction on the weekly chart. Very simple stuff. Very, very simple, basic stuff. So by the time price, now note that in as much as you saw double top, double bottom here, please mute your mic. In as much as we saw double bottom here, also take note that this area, we also have liquidity. We also have liquidity, and we see price around here. We see a liquidity here. We see an untapped liquidity here. So I expect that price is definitely going to come and, want to grab liquidity there. So we may be seeing this move, coming all the way to the downside like this in an aggressive manner. So I know that overall, generally speaking, from my analysis, I know that overall the yen is bearish, right? So when I see bullish price action, I'm going to trade it in that direction. So when I'm seeing a bullish price action on JPY, right, what do you think is going to be happening to a pair like GJ? Let's take a look at GJ. Let's look at GJ. Right? Notice we saw a bullish price action on 4 hours on JPY. And now look at a pair like GJ. So I also want to compare, look at this. Look at this. Why there was a bullish price action on the yen basket on the H4, we also saw that at the same time, we were also seeing a bearish price action on JPY, right? You can see how that is happening. So it happens simultaneously, right? Simultaneously, when this is happening, you start seeing that price. So I always just want to have a clue. That's why I said I call it market sentiment. I always want to know what exactly is going on to the overall basket, as yen, if I want to trade GBP, JPY, Euro, JPY, all of these guys, AJ, all of these pairs, I always want to know what's going on with JPY basket, right? So when I see that there is supply on the JPY basket, and then also understand the overall direction of it. I lost that chart. Let me go back. Yeah, here we are. So you can see when I now have an overall perspective of what's going on with the yen basket, I know that whatever I'm seeing on the smaller time frame are just temporal. They are just temporal. So I always want to trade in the direction of the higher time frame, which is weekly, daily, weekly, monthly, right? So when I've been able to achieve this, I know that, okay, whatever I'm going to be seeing, is just going to be temporal. So considering a pair like JPY now, from what we're seeing currently, considering what we're seeing currently now, what do you think is going to be happening this week? Considering what we are seeing or what we've done now, what do you think is most likely going to happen this week? If somebody type in the chat box, what do you think is going to be happening to the yen across board? Or if anybody's confident enough, you can unmute your mic and say something. Feel free. Good evening, boys. Yeah. You want to say something?
Yeah. For me, I think it's able to break.
What do you say?
I said, for me, I think it is able to break the point you draw.
This level, right?
Yeah.
And then crash lower.
Yeah, I think that will have to wait for a long time.
Okay, great. Great. You can see that now. You can see that even from this rejection, thank you for answering that question. You can also see that rejections of price, multiple rejections of price in a certain level is also an indication of weakness, exhaustion. So you can see how this massive candle went all the way up and then couldn't continue. You could see that failure to continue bullish. And then that was already an indication. That's already giving us an indication that price is going to crash lower. So, and then you can see the next pattern that formed was an engulfing, bearish candles telling us retailers are selling across board. Retailers want to sell the yen across board. So when I come to my chart, I'll be looking at this, right? I'll be looking at this, waiting for price to break below this level to consider a continuation to the downside. And remember why this is happening. I also want to look at a pair that this will be happening simultaneously, so that I could be able to, benefit from it as well. So this is how I always want to consider market sentiment before I trade. So it's the same thing for the XY. When you want to trade the USD across board, it's important to be able to understand how the XY, how you can trade the XY. Now, these things are very, very simple. You can see how I was able to break this chart in less than 5 minutes or how many minutes, it was that easy, So you should come to a point where you're looking at these structures, looking at the chart, and you can tell what the market is going to do in less than 4 minutes. You should be able to come to the chart and be able to know what direction the market is going to in um, less than 4 minutes. So short term we're bullish and long term we're bearish. Amazing. So that's from additional. Yeah. So long term we are bearish, short term we are bullish. Now, if you also go and look, if you want to now get a proper overview, yes, the video will be available after the class. If you now want to get a proper overview, you can now start checking out for the higher time frame. Please mute your mic. Someone's mic is having glitches, so it's interrupting. We have about 6 minutes more to go. So if you want to just like compare charts, make comparison amongst the chart. Now we know that yen across board, long term is bearish, short term is bullish. So we also want to compare what the long term long-term direction is for the yen-based pairs, right? We also want to know what the long-term direction is for the yen-based pairs. So when I come to a pair like AJ, I always want to check on the weekly charts. Can you see? Just barely looking at it, this is bullish. Where's the GJ? Barely looking at it, this is bullish. This is clearly bullish. UJ, clearly bullish. Can you see long term bullish? These are charts on the weekly, and I expect a very massive run on the USD JPY. I expect a very massive run to the upside because of what's going on currently across the G7 majors, across Asia, across Europe, and Ukraine, what's going on currently. So I expect that the safe haven assets are going to rally because we're in a risk environment right now. So you see this happening, long-term bullish, long-term bullish, long-term bullish, all of this long-term bullish. So when I have now all of these markups on my chart, I've had them since January. I've just been trading in line with the direction of the chart. I've had them since January, and I don't know when next I'll be having new levels because I know that overall the market is still going very, very far. So look at GJ for instance. In as much as we're seeing a current crash in the market, remember we said the yen market is currently bearish long term, and so if it's bearish long term, I should expect that a pair like GJ, AJ, UJ, the JJJ should be bullish long term across board. So you see this from my analysis I have done. I still expect GJ to come this far, like about 100 pips, about, let me see how many pips range. About 1,000 pips range, almost 1,000 pips. It's like 938 pips, almost 1,000 pips, to the upside, taking out all of this liquidity. You see that now? So it's the same thing so I always want to make that comparison, and when you're doing this analysis, you have to check it time frame after time frame. So I go to the yen basket, I check the weekly chart, the monthly chart, I move to the JP, I move to like GJ or UJ. I also want to check the same thing, like the weekly chart, the monthly chart, the direction of those charts. I also want to ensure that they are in sync at every given time. And if they are not necessarily in sync, I always want to be sure that, I wait for structures to give me alignment. I wait for structures to give me alignment. So they have to, when you're checking them out, if you're checking GJ on the weekly, ensure that you're checking JPY on the weekly chart. It has to be in sync. If you're checking 4 hours, check the JPY on 4 hours. If you're checking 1 hour on GJ, check 1 hour chart on the yen basket. So this is how you transpose and make do with all of this information and this data to be able to produce the required results that you're expecting. So I hope this has been helpful. I don't know if this has been helpful to anybody, but then I just said I was going to do something for the general public and just show you a few tips on how I do some of my trades. So I just have all of these markups. I've had them since like January, so I don't need to withdraw them and all of that. So these levels, how you draw these levels, there are some of the things I'll be teaching you when you join in, when you sign up if you want to, So that's basically for REITs. I think that's that for now. So if you want to check other pairs, if you want to trade the USD JPY across board, you use the XY. When the XY is strong, when it's very strong, it tells you that the dollar is going to be very strong. When the currency index is very strong, very bullish, it tells you that pairs with USD base, USD quoted pairs like Euro USD, GBP USD, all the USD are going to be selling up, and then the DXY is going to be going. If you confirm from structures that the XY is very bullish, on the higher time frame, like I said, it's going to also show you that all the Euro USD, the USD pairs are going to be going in the opposite direction across board. So I hope this has been helpful. Hope this has really been helpful. So if you have any question from now, you can DM me directly. I'm sorry, this section is quite short. I don't want to take anybody's time, and I don't want it to be unnecessarily long. So have a great weekend ahead, or have a great trading week ahead, and talk to you soon. Cheers, and God bless.